Hey there, this is David Cox, Senior Portfolio Manager of Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, March 28th, 2025. Let's get started. We will, as usual, sort off by week here. Bitcoin up, silver certainly making some headway, and gold. These have been strong trends here for the most part for quite some time. Down on the bottom here, we've had bonds. It's kind of been a risk-off week, meaning the risk-off typical assets anyway. Things like bonds and the defensive kind of stuff has come off here. So just a reminder to pause your video player at any time for more detail. This is the S&P 500 weekly. We are still oversold here, sitting. You can see here again. I'm just pointing this out just because this doesn't happen usually more than about once a year. Again, in a trend, we need to always be aware, though. Again, overbought, oversold are not just sort of as simple as buy or sell. They are very, very important to actually gauge whether the trend is up or the trend is down. You can see the horizontal line here continues to reside around those summer highs, and we've bounced off that line at this point. Just looking at it a little bit different way, same S&P 500, but middle panel here, we've got the percentage of stocks over the 50-day moving average sitting about 40%. That's not a high number, and you can see there's been definitely a deterioration course over the last many months. And on perhaps more important based on percentages 200-day here, we're sitting at 44.7%. So 60% would typically be what I look at as the line in the sand as sort of being a healthy market. So again, not a healthy market, but again, a market that is oversold and again needs to kind of show itself and prove itself along with the sector rotations that are happening now. Speaking of sector rotations, let's take a look at Canada for a change versus the S&P 500. So this is through both lenses, and I'll show you why. What I mean here. On the left side, what we've got is the iShares Canada. So that's the EWC, trades in the U.S. This is really looking at it, as if you're an American. You're looking at it now versus the S&P 500. You can see I'll give you there's a higher low, but mixed feelings about whether there's sort of something to be super excited about yet. Now again, there's lots of sectoral composition differences between our Toronto market and the S&P 500. On the right side, you can see you're looking at it, again taking Canadian dollars out of play because we're using XIC in this case on the TSX and XSP in the US. You can see we've got an uptrend. Now again, if I zoom out, again, this is a new uptrend, but it's something we certainly want to be aware of. And here's a different way of looking at it. So this is now again XIC divided by XSP, and this is 4 time frames that I regularly post on Twitter. In the top right, we've got the short-term trend. So that's the 8 and 20 period moving average. That's up. Top left, we've got the 20 period moving average over the 50. You can see that is also up. Bottom left, we've got a 5200, typically, much more prominent crossover here amongst, those that follow moving averages is definitely turned positive as well heading into this year. And you can see here, even on a 13-34 week basis, we've now got a long-term trend change that is upward. And fair enough. I mean, the chart itself suggests that, yes, we need to sort of pay attention to this. And again, I'm talking now from a Canadian standpoint. Long-term trend here on the technology sector, very, very important sector, sitting, I think, 30-31% of the S&P 500. Turning negative here, bearish cross of the 13 and 34 week this week. This will be the first time since 2022. Again, see the MACD histogram here making lows for the move, and also again we've had a lot of negative weekly force here for some time. Last week I brought up Tesla. I talked about how again in the face of just extreme sentiment, or what it looked like to me, the stock was at a pretty important point. Now the stock has bounced actually 15% since I brought it up last week. Again, just pointing out, we've got to always be aware here, right? The media does its job of telling us things, and it's quite possible as investors that we are late, right? We don't want to be sort of always getting negative when everyone else is negative and getting positive when everyone else is positive. This is, of course, what causes emotions and causes trouble in our portfolios. These are still very clear uptrends as far as I'm concerned, two of the best sectors without question. The communication sector, XLC on the left in the US, and the financial sector in the US on the right. Higher highs, higher lows. These are weekly charts over the course of the last couple of years. Again, digging now into a couple things going on in the AltSync pool, you can see here T-Mobile comes from the communication sector. And so again, this is the way I typically like to look at things. First off, we know we've got a stock here that meets the InSync universe, which means it's outperformed on a 1, 2, 3, 4, 5, and 10-year time frame versus the S&P. Clearly see this is a weekly uptrend without question. This is a very, very narrow pullback here after a breakout. And so again, turning back upward here. So that was a short-term dip. You can see in the bottom panel here, been outperforming for the course of the last year versus the communication sector. And then in the bottom panel, you can see been outperforming the S&P 500 over that short time period as well. Another way, again, we always want to kind of focus in on absolute trends, of course, but relative trends are important. I like to compare to as many different things as different opportunities present themselves. And so again, Agnico Eagle, one of the definitely strongest stocks in the Toronto market related to gold, which of course is rising. You can see here the stock itself making highs. This is again 52-week highs. This is I'm not sure if it's all-time highs, but either way, a very, very strong stock in a clear uptrend. Same chart across the top here, but on the bottom, what we've got is we've got it versus U.S. stocks in the bottom. You can see the uptrend versus gold stocks in the bottom. So you can see the uptrend, meaning it's outperforming the gold stock peer, the ETF, that's the XGD, and then outperforming bullion itself. That's best of all worlds, essentially, the way I look at it. Pretty good stock. Now, again, it's got volatility, but that's another matter. Also, just take another look at another stock here that's been certainly owned for a couple of years. Broadcom. Broadcom has been a leader in the technology space, in the semiconductor space, and certainly AI and whatnot. And again, you can see on the left side of your chart, this is a 13-year chart. Without question, back of the room test. What's the back of the room test? Well, again, back up from your computer, you'll be able to see clearly lower left to upper right. This is an uptrend. Now, again, this is a pullback, and again, it can be a little stiff because this is actually 32% down from the recent highs. The problem is that as investors, we still need to make decisions at that right edge of the chart. And the problem is that if you look on the right side, this is a weekly chart, still higher highs, higher lows, absolutely. You can see the relative trend here coming under a fair bit of pressure versus technology in the middle panel and versus the S&P 500, still uptrends, still both uptrends. The reason I circle those in red is because sure, we're losing a moving average, but again, if we really zoom out, this is still a very healthy stock. The problem is, again, volatility. The problem is, the sectoral composition of this market is not favoring technology stocks. And so again, it becomes an opportunity cost. It becomes a source of risk. We have to be a little careful here. So again, all I'm saying is trim the position again. Let's take a sector watch here as we finish off, and we'll sort by week as we always do. There's the discretionary stocks, there's the communication stocks up at the top of the list, and on the bottom we've got utilities and healthcare, Canadian technology and whatnot. Again, lots of trends kind of bouncing around here, but again, you can see gold stocks here. Definitely both sides of the border. These have been very strong stocks, short, intermediate, long-term trend upwards. These are very volatile areas without question. And again, I want to point out gold stocks particularly, they have long-term underperformed gold bullion itself and silver bullion. And so it's always important to remember when we understand risk that we're putting into our portfolios and whatnot. So again, please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.